Hi there guys, welcome back to another video. Now as you can probably tell by the thumbnail and the title of this video, we are going to be looking at how as traders we can look to prevent some of our unnecessary losses and also on top of that control our emotions and improve our overall mindset. Of course, as traders we are always looking to improve in any way we can, so therefore hopefully as always there's something that you can pick out of this, implement into your own journeys and improve for yourselves as well. I will just mention as well, as again, as you can probably see from the thumbnail, we are going to be going over a brief gold trade for the viewers that do like the trade breakdowns as well. I mean, it does actually link in with the sort of emotions and the mindset side of things as well. So make sure you stick around till the end if you do want to see that as well. But again, without further ado, we'll jump into it and we'll have a look at some of the tips in which we would recommend in regards to, again, preventing those losses, controlling those emotions, and ultimately improving the mindset as well. So biggest thing for me to begin with is keeping a trading journal. Now, if you do already keep a trading journal, you will know how sort of important and vital this is, and also how beneficial it is as well. If you don't keep a trading journal, then listen closely because this one will be something good that you can implement. So again, with a trading journal, firstly, I will just mention if any of you don't know where to start with a trading journal, because if you haven't done it before, it can be a bit confusing. Just reach out to me and Sam on Instagram. The links for both of our pages will be in the description as always. Just drop us a message and just ask us for a journal template. We'll be more than happy to fire that over to you as well, just to give you that helping hand. But as I say, in regards to the journal, it is literally just a journal for your trades. So when you would take a trade, you would journal everything about that trade. You would put down the date and time that you took the trade, the direction you took the trade in. You would also look at things like confluences you had in and around the areas or reasons to take the trade. You can also kind of delve a bit deeper into it, and you can start tracking things such as the amount of drawdown that a specific trade does from a particular area, and the sort of reaction that you would tend to see from a specific area. So there's a lot of things that you can take from this. Now, in the beginning, I will be brutally honest, it's not going to be massively beneficial, because if you have 1 week's worth of trades, it's not really going to give you an overall picture. Once you start to build up that data, and it's consistency again, same with everything in trading, you have to be consistent with it. Once you remain consistent with it and you build up a reasonable amount of data, so again 3, 6, 12 months plus, the more the better, of course, you can then start to look back at that previous data that you've gathered from your individual trades you've taken, and you can start to see correlations between certain things. You can start to see similarities and differences, and you can also start to see what seems to work well and of course what doesn't seem to work well. So there's a lot of benefits to having a trading journal. Again, once you start to build up that data, you can then start to kind of break it down and chip away at it. So for example, if you trade, let's say, 5 specific pairs, you journal all of the trades that you take across those 5 pairs for 6 to 12 months. Once you've got that data, you can then start to look back and you can break it down. For example, what I like to do is break it down into each individual pair. So I would then create a new page on the spreadsheet for each specific pair. So for example, I would have all of my trades for gold, all of my trades for GA, all of my trades for USD CAD, whatever it is that you'll be trading, for example, you can then start to break it down to each individual pair. Now, once you start to do this, you'll be able to start to see, again, similarities in the winning trades and the losing trades, whether that be the reaction it has from a particular area, the amount of drawdown it seems to do from a particular level. And on top of that, you can start to see which winning trades and also which losing trades have things in common. Again, whether it be confluences, whether it be time of day, whatever it may be, this can all be pulled from the trading journal. So again, you do have to be consistent with it, and you have to build up the data, and be very strict with it. And you do have to be disciplined to actually journal the trades. I know a lot of people who are a bit sort of hit and miss with the journal. They'll journal the odd few trades, then they might leave it 2-3 weeks and forget to journal some trades, and then it'll leave them in a position where they've got to go back and try and find every single trade they've taken, note down all the confluences, reasons for the trade, add the screenshots in, etc., etc. And that's when it starts to get difficult and you start to kind of fall off and stop doing it. So again, you do have to stay consistent with it. But once you do stay consistent with it and you build up that data, it is very, very, very beneficial because, of course, every trade is going to be different. You know, you might trade the same way as somebody else, but ultimately, you know, you're going to think differently and you're also going to act differently in the moment as well. So having that trading journal, it's kind of, you know, a booklet of data in some respect that you can look back at and say, right, okay, I know that 80% of the time this particular confluence setup, so for example, these confluences seem to work best on this particular pair, and from the data that I've gathered, I can see that 9 times out of 10 with that trade, it will give X amount of pips reaction from the area before making a pullback. So then you can start to tailor your sort of approach and your trade management based on the data in the journal. So not only can you start to focus on what trades or what technical setups seem to work best and focus on looking out for those, but you can then also start to prevent the losses and start to notice that, okay, there seems to be a trend in this specific technical setup on this pair. Once you start to see that, then you can say, right, okay, what I'm going to do is, you know, I'm not going to trade that setup anymore. Or if you are wanting to trade it, lower the risk on it, because of course the hit rate's not going to be as good. And therefore the following month, or perhaps at the end of the week, if you're trading lower time frames and taking a lot more trades, you can then start to look back and see whether it has been beneficial to remove or focus on a specific setup, whether it be a winning trade or a losing trade. So again, there is a lot of information that you can gather when you do build up a trading journal and have that data there. So as I said before as well, if you do want the template that myself and Sam use for our trading journals, feel free just to give us a shout on Instagram. As I say, the links will be in the description, so just jump over to one of those and drop us a message. We'll be more than happy to fire that over to you. On to the next one, which for me, again, is setting a trading plan and sticking to it consistently. Again, very, very important. If you've not got a trading plan, you're not going to know what you should be doing and what you shouldn't be doing. And realistically, you're going to be gambling. And that's the last thing as traders that we want to do. Okay, so a trading plan, this is completely sort of different for every single trader. Again, every single person is going to act differently and think differently in the moment. So therefore, your trading plan will be tailored to you and what works best for yourself. Now, the trading plan, the reason I've followed up the trading journal with the trading plan is because once you start to journal your trades, you can start to then pull further data from the trading journal and not just about the trades that you've been taking, but you can then start to set yourself a trading plan. So if you're journaling every trade that you take, you can then start to see, for example, if you maybe take 5 trades in a day, and let's say the first trade won, the second trade lost, and then you were back to sort of break even overall for the day, and you thought, right, that's where you start getting emotion sort of coming into the trades, and you might start thinking, you know, I need to make it back, or I shouldn't have took that second trade and then I'd have been up. So then you'll try and find another trade, and once again you'll start chasing losses because you don't have a set solid plan to stick to. So it will be different for everyone, but as an example, you could look at including things in your trading plan such as once you reach a certain amount of losses in a day, you stop trading, regardless of what setups you see. If you take a certain amount of losses or if you take a certain amount of wins, you stop trading. Keeping strict with it and keeping consistent with it over a long period of time may not seem very fun in the beginning, and it may be frustrating when you do sit back and don't take a trade and it does work. But long term, you're going to want to stay consistent with it, and it is going to be beneficial. It is going to be beneficial for you, and it does go hand in hand with the trading journal as well. Again, if you want any help with setting a trading plan out, as always, me and Sam are available. Just fire us a message on Instagram. Any questions you've got in regards to it, we're always more than happy to help anyway. So, you know, if you are struggling there, and again, a trading plan is something that you've not got, and you do, after watching this video, want to start making one, which I do suggest that you do go ahead with if you haven't already. Again, any questions you've got, just fire it over to us and we'll be more than happy to help in any way we can. On to the next one, which is more of kind of an understanding, which again, as we've got here, understand that each individual trader, and regardless of the strategy that you trade in, will think and act differently. Now, I have mentioned that in both points there, but again, it is a very big one. You can trade the exact same strategy as someone, you can trade the exact same pairs as someone, you can do everything exactly the same. However, when it comes to taking the trade, acting upon the trade, managing the trade, every single individual trader is going to be different. And therefore, this is why you need to understand that just because somebody else does something doesn't mean you're able to do it. And just because you're able to do something doesn't mean everybody else is able to do it as well. So once you can genuinely understand that no two traders are going to be the same, it will then start to make the acceptance of winning and losing a lot easier to understand. And therefore, it allows you to remove a lot of emotion from taking losses and also taking wins, because the emotion in taking losses is just as important as the emotion in taking wins. The last thing you want to do is let a win get to your head. And again, the last thing you want to do is let a loss set you back. So once you can understand that deeply, it will make it a lot easier for you to watch other people taking trades and winning when you have no trades there, and vice versa. You know, it will make you less emotion filled in that respect when it comes to winning, and it won't go to your head as much. Now, that's the last thing you want to do, is when you take wins, and perhaps maybe if you've got a small group of friends that you trade with, or a few friends that you're in the journey with, and they're not finding anything and you are, the last thing you want to do is let that get to your head. Because again, everybody's going to be different. They may have a different trading plan, they may be looking for different signals, different setups, and therefore the trades that are presented to you aren't going to be presented to them because they're not looking for it. Okay, so that's very sort of psychological, but once you come to understand that, it does benefit you a lot. Okay, and another final point as well, which I do want to touch on, which kind of links into that as well, is do not compare yourself to anybody else. As we've mentioned, every single trader is going to be different, regardless of what you do the same as somebody else. The only person you should be comparing yourself to is yourself, okay? And that's where having that trading journal and having that trading plan is very beneficial, because as long as you are looking at how you were a week ago, a month ago, even a year ago, depending on how long you've been trading for, if you can compare yourself in the present to yourself in the past, you can then start to see whether you have been improving. Now, if it gets to a point where you haven't been improving, you can then start to say, right, okay, what more can I do that could possibly benefit me? If you're not thinking that, start thinking it, because otherwise you're going to be stuck in the same place and you're not going to improve. The harsh truth is you're not going to get any further than where you are now. So if you don't have the discipline to, or the want as well, to go and find something else, and even if you don't think it's going to be beneficial for you, if it works for other people, and as I've mentioned, what may work for somebody else may not work for you, but it also may work for you. So why would you not give it a try? Okay? And if you didn't do it yesterday, do it today. If it doesn't work over a long period of time, sack it off. But you will never know unless you do it. So the only person you should be comparing yourself to, as I've said, is yourself in the past. And as long as you are slowly improving each day and doing that little bit more every single day, you are slowly going to improve and get to that point in which you want to get to. So I hope that that sort of brief summary of a couple of points which we focus on has helped a few of you. Again, if you've got any questions on anything that we've covered there, feel free to drop myself or Sam a message via Instagram. As I say, the links will be in the description. We do, of course, have the free Telegram group as well, which we do drop a few trade ideas, any updates, etc. Again, link will be in the description for that as well. And of course, if you are interested in the analysis group as well, head over to the website. All the services are available on there as well. But otherwise, we will see you in the trade breakdown. So then guys, jumping straight into the trade breakdown. It is, as I mentioned before, a trade that we've taken on gold. Very, very simple trade. As we've always mentioned, if you have watched the trade breakdowns on gold previously, you will be aware that gold obviously does like its structure. So it is a very structurally based trade. But as you can see, we'll jump straight into it and we'll have a look at the reasons as to why we took it. And as always, hopefully there's something you can take from it. So very, very simple trade here. Now, if you have been trading gold, you will know that it has been selling off for quite a while. Now, I do get a lot of questions in regards to kind of finding the reversal area. And I know a lot of people will often try and catch the falling knife, try and find that reversal and get wiped out multiple times before they do then catch that reversal. And depending on which kind of account you're trading, whether it's a prop firm or whether it's a personal, often if it is a prop firm, it may be a point where you reach, you know, a point where you physically can't risk anymore for the day, and therefore you are literally unable to catch that reversal because you've tried too many times and of course been stopped out. So in this instance, this is a very good example of waiting until that reversal has been confirmed before getting in. So as we can see here, I'm not going into too much detail because I don't want the video to go on for too much longer. But as we can see here, price did push down to the 16.15 area. Now this was the sort of bottom before we had this big reversal back up. Okay. Now what I tend to do personally is, unless I've got, again, a very strong technical setup there that's valid and worth taking, I will wait for that reversal to confirm itself. So what we mean by that is a change in structure. So once we see that price then starts forming higher highs and higher lows like it does here, then we can start to look at entering in the opposite direction. So in this instance, long. Now what we've done here is we've found the bottom. It's then broken up and pushed back above this previous high. Okay, it's then made a new higher high and started to pull back. So what we've done in this instance here is we put a fib from the bottom of the move to the first area for pullback, which was here, and we can see straight away that one of the favorite levels to use on the Fibonacci is the 38 for gold. We can see that this lines up very nicely with this previous high. So if we get a zone here and we mark off from this high over to the fib, we can see that we've got a very nice, what looks to be a break and retest area, and a potential, if we can form a new higher low here, then we can see a continuation further up. Okay, so that's exactly what we've seen here. We've got a break and then a potential retest of this previous structure here alongside the 38 fib, and we do also have a few EMAs in and around the area as well. Not much more to it. Again, we took the buy from here. We went with a 50 pip stop loss on a trade like this. Okay, and as we can see, it did push up. It did do roughly, let's have a look, about a 100 pip move from our entry area. And then it did pull back very, very close to our break-even stop loss. So for me personally, as always, once a trade does normally 1-to-1, potentially depending on the price action, 1 to 1.5, we will then take a partial profit and move our stop loss to break even. So at that point, we physically cannot lose. And if it does turn around and change direction, then we're still up for the day. Okay, and when we're trying to catch that reversal, that's the most important thing you can be looking for. So that's what we've done here. Luckily, it didn't quite stop us out. We did get in off the wick, so we did get in off the bottom of the zone as opposed to the top of the zone. But anywhere in and around this zone would have been okay. Now, depending on the broker, depending on the spreads, you may or may not have been stopped out at break even if you did get in from the top of the zone. But again, as I say, that's all broker and spread dependent. But here, what did we do? We took a partial at 1 to 1.5. We then put our stop loss to break even. So I'll just follow that along here. So we then put our stop loss to break even. Price then did have a little pullback here, as we've mentioned, touching into these EMAs again, and then making a considerable move back up and breaking above this previous high. So what we needed was we needed to see price break above this previous high. Now it's formed a new higher low. We need it to then form a new higher high, which it has gone and done here. It's formed a new higher high. It's pulled back. It has ranged around this, in and around this area here, for about, well, it will have been over the weekend. And then upon market open, beginning of the new week, we did see a further push up. And as I mentioned at the beginning of the video, in regards to this particular trade breakdown relating to mindset and emotions, as we always do stress, holding some part of the trade is always beneficial. And the reason I say it relates to the mindset and emotion is because, for example, if you then start to have sort of no technical setups present themselves and you have to sit on your hands, I know a lot of traders do experience FOMO. They'll see other people taking trades, they'll see other people making profit, and they'll think, oh, I need to do the same. No, you don't. Sit on your hands. If you can't sit on your hands, you need to work on it. That is the biggest downfall, I would personally say, in regards to taking unnecessary losses. Now, when you have a runner, if the market is moving in one clear direction, like it has here, as we've confirmed the reversal, higher highs, higher lows, having that runner means that you can sit on your hands, not take a trade, and still gain more profit. Now, it makes it a lot easier when you have that to sit on your hands and not take another trade. Not only does it, again, improve that kind of being able to deal with the sort of patience and the discipline you need to be able to sit on your hands, but also it is gaining more percentage or more profit at the same time. Then what I would personally do is I would then start to mark off areas in which there would be maybe a higher time frame key level. So of course this was an hourly trade. I would then maybe look at where are the next 4-hour or daily resistance levels. Where is price potentially going to have a big reaction from? I would then mark up those levels and I would set alerts in and around those levels. That's exactly what we've done here. The first pullback area for me was actually up here, in and around this area. Now if I just go, let's have a look. If we just zoom out a little bit, we can see here, this area here was the first, for me, major resistance area in which there could have been a pullback. So I set my alert in and around this area of this previous structure. The alert did trigger, however, it smashed straight through and then pulled back to retest. So there was no reason for me to take another partial profit because price has broken above that resistance level, retested it as support. And what would you expect? You would expect further continuation. Again, higher highs, higher lows, which is exactly what we've seen here. And it's pushed up to go on, which currently at this point of the video was running 1 to 17. This, in actual fact, was the next area of resistance. We can see we've got these highs here. We've just got quite a clean key level here, and if we do look on a higher time frame, which I'm not going to do that because, like I say, I don't want to drag the video on, you will be able to see as well. It is kind of a reasonably strong key level on a higher time frame as well. So I did take another partial profit here. At a 1 to 17 risk to reward. As I say, we did go with a 50 pip stop loss on this trade. So at 1 to 17, I took another partial profit. Then I moved my stop loss into profit. So therefore, again, if it does decide to completely reverse for whatever reason, worst case scenario, it will stop us out for profit. And of course, we will basically just sit and hold that trade until we feel comfortable to close it, or it reverses and stops us out in profit. So again, hopefully you can see how that does link and benefit to mindset and emotions, especially in dull market conditions, slow market conditions like we have seen over the last week or two. It has been very quiet and very slow, at least for me personally. But hopefully you're able to take something from it. Again, any questions, drop a comment or give me and Sam a message on Instagram. But otherwise, we'll see you in the next one.